Did you know that most LLC owners are making critical mistakes when paying themselves, mistakes that could cost them thousands in taxes or even trigger an audit? The truth is, if you don't know the right strategies, you could be throwing away money that should be in your pocket. In today's video, I'm going to demystify the process of paying yourself as an LLC owner in 2025. Whether you're just starting out or running a thriving business, this topic is crucial. First, I'll show you the techniques and concepts successful LLC owners use to pay themselves in a way that maximizes flexibility and minimizes tax burdens. Second, I'll uncover the common mistakes that many LLC owners make and reveal the strategies others are using to save thousands on taxes every year. Finally, I'll break down whether these methods will work for your specific situation so that by the end of this video, you'll have the confidence and clarity to pay yourself correctly and successfully as an LLC owner. Now, you might think this video is just going to cover the basics, but let me tell you, I'm going deeper than that. I'll give you actionable steps, real-world examples, and insider tips you won't find on a simple Google search. By the end, you'll not only know how to pay yourself, but you'll also understand why these strategies work, how to avoid costly mistakes, and how to make smarter financial decisions that can transform your business. Before we dive into the video, let me introduce you to Bazzi, a professional formation service company that specializes in helping you file your LLC or corporation. Bazzi is an amazing company that simplifies the entire process of creating your LLC. They even offer a service where they'll file your LLC on your behalf, saving you from all the hassle. A full review of Bazzi is available in the description box below, and their website is linked in the first comment. Make sure to check them out. What is an owner's draw and how to take one? Let's start with the basics. How do you actually pay yourself from your LLC? Picture this, you're the proud owner of a small but thriving bakery. After months of pouring your heart into perfecting recipes and growing your customer base, you finally start seeing profits. You've worked so hard, and now it's time to pay yourself. But here's the question, how do you do that without mixing your business and personal finances? That's where an owner's draw comes in. Think of it as a way to reward yourself for your hard work while keeping everything neat and legal. An owner's draw, sometimes called an owner's distribution, is when you, as the business owner, transfer money from your business account to your personal account for personal use. Remember, as a business owner, your goal should always be to keep your personal finances and business finances completely separate from one another. Otherwise, you could accidentally commingle funds, which can get you into legal trouble with the government, something you definitely don't want to deal with. If you want to be a good steward of your finances, you'll make sure not to commingle. Owner's draws are designed to prevent this exact thing from happening. So, when you think of an owner's draw, think of money being taken out of your LLC's bank account and moved to a personal account that you can use for personal expenses. Now, I know you might be wondering, how exactly do I set this owner's draw up? Don't worry, I've got your back here. Here are the steps on how to take an owner's draw. Step 1. Get your EIN, Employer Identification Number. Have you ever heard the story of Jeff Bezos, who started Amazon in his garage? At the time, Amazon was just a tiny operation. But even then, Bezos made sure the company had a solid foundation, including setting up its tax ID. Why? Because without it, there's no way to open a business bank account or file taxes correctly. An EIN is your LLC's social security number, and it's critical for keeping your business legit. To get one, go to the IRS website and fill out their online application. Once you've got your EIN, you're one step closer to paying yourself the right way. Step 2. Open a business bank account. Imagine this, you're a restaurant owner in the 1980s, running a cash-only business. Money flows in and out, but because there's no separation between your business and personal finances, everything gets messy. The result? Legal trouble and accounting nightmares. A business bank account solves all of this. It creates a clear boundary between your personal and business funds, ensuring that your finances stay organized and compliant. Take your EIN to your preferred bank and set up a business account. This account will handle all income, expenses, and your owner's draws. Step 3. Take an owner's draw the right way. Once your business has generated enough income and you're ready to start paying yourself, it's time to take an owner's draw. This is how you transfer some of your business's profits into your personal account while saving a portion for taxes. To do this, you can move the desired amount from your business bank account to your personal checking account. You have a few options for this transfer: writing a check, making a bank transfer, or withdrawing cash. I recommend using a check or bank transfer since these methods leave a clear paper trail. This documentation can be valuable if you ever need to provide proof of the transaction. It's also important to record the draw details for your bookkeeping, including the date, the amount, and the purpose. Keeping accurate records of all business transactions, including owner's draws, is essential for good financial management. Once you've transferred the money and recorded the transaction, the owner's draw is complete. From this point, the funds in your personal bank account are free for personal use. However, here's something crucial to keep in mind: owner's draws are not the same as a set salary. When you operate as an LLC, you don't have to pay yourself a fixed salary. Instead, you have the flexibility to decide when and how much you want to pay yourself. The timing and amounts of your distributions can vary depending on your business's needs. Many LLC owners appreciate this flexibility because it allows them to leave more cash in the business account during lean times and take larger distributions when the business is thriving. But here's a word of caution: avoid the common mistake of withdrawing too much money too soon. It's understandable to feel excited when your business starts making money and you want to enjoy the fruits of your labor. However, withdrawing too much too quickly can leave your business vulnerable. You must ensure there's enough money left in your business bank account to cover operating expenses and taxes. Remember, as an LLC owner, you'll need to pay a self-employment tax of 15.3% in addition to your regular income taxes. This tax includes 12.4% for Social Security and 2.9% for Medicare. Failing to account for these obligations could lead to financial trouble later. The last thing you want is for your business checks to bounce or your account to go to zero because you underestimated your expenses or tax obligations. So, always leave enough money in your business bank account, especially when you're just starting your LLC and adjusting to managing these responsibilities. Careful planning will ensure your owner's draws work for you without jeopardizing your business's stability. Case study: paying yourself from your LLC. Let's say you run an online store and your LLC earned $100,000 last year. After $60,000 in expenses, you're left with $40,000 in profit. You might be tempted to transfer all of it to your personal account. But wait, here's what the smart business owners do. They calculate their tax obligations first. Remember, LLC owners are responsible for self-employment taxes, which cover Social Security and Medicare, at a rate of 15.3%. On $40,000, that's about $6,120. Smart owners keep that in the business account along with extra funds for unexpected expenses. They only transfer what's reasonable, say $20,000, to their personal account as an owner's draw, leaving enough breathing room in the business account. This strategy ensures they're prepared for taxes and surprises, like a broken laptop or last-minute marketing costs. Other tax information for LLC owners. Here's something many new LLC owners don't realize: your profits are taxed whether you transfer them to your personal account or leave them in the business account. Why? Because LLCs are pass-through entities, meaning all profits pass through to the owner's personal tax return. But the good news? Unlike C corporations, LLCs avoid double taxation. You're only taxed once, at the individual level. This structure saves you money and keeps things simple. Limited liability in LLCs. One of the biggest reasons entrepreneurs choose LLCs is the protection they offer. Imagine you're running a small catering business, and a client decides to sue you for a catering mishap. If you've kept your LLC compliant, no commingling funds or maintaining records, your personal assets, like your home and savings, are safe. Only the business assets are at risk. This protection is why millions of Americans rely on LLCs to safeguard their personal wealth while running their businesses. And there you have it, the complete guide to paying yourself as an LLC in 2025. Now you know about owner's draws, how to avoid mistakes, and even strategies to save money on taxes. If you found this video helpful, hit that subscribe button and share it with someone who's starting an LLC. For more tips on business registration and LLC formation, check out the links in the description for more in-depth content. Thank you for watching, and I'll see you in the next video.